Good morning, everybody. As I was logging into YouTube here and writing, the markets need to move now. They pop above this resistance area. I don't know. I was just asking Dan, was there some news to get them moving here a half hour before the open like that? Um, anyway, we've got this consolidation at resistance, which was bullish price action. You see, that was started yesterday after a run up and then overnight trading as it retested this area. And now it's breaking out over the highs and it's got room to go higher. And of course, we always say, well, higher to where? And this little area up here, which we see in the S&Ps as well, pretty much formed in the same way. You see how it lines up on the daily chart there, right at this little congestion of opens and closes. We'll see if it actually gets there. You can see it's bumping its head on the 20 MA there on the daily. It's just widely followed. It's subjective as a reference point, and there's nothing to the left. And that's why we say moving averages are subjective. You say, well, why do we use them? Well, the way we use them, it gives us a view as to what's happening in multiple time frames, is because we use them as they relate to multiple time frames. This is the weekly time frame, 10 MA on the weekly, and this is close to the 10 MA on the monthly. So we see what's happening in multiple time frames. Are they trending down? Something they flat, and so on. And so we have to remove any subjectivity to anything we put on the chart other than price. So as you can see, this has got room to run up, and we'll assume that it will continue to do that. It's getting a little extended short term. It's buying up, pent up buying there. And that was the breakout area, and it's being bought. I was running straight up, and of course, you look for little entry points, and that would have been one right there at 950. See the bottoming tail bar that broke the low. So that's a type of continuation pattern, or what we call a correction bar. It's off and going. All right. Certainly seemed like news would have hit. I guess, whatever. Maybe come out later. But same pattern there. It's got room to run up toward the 200 MA, which now you see that is lined up with that congestion area, to the left on the hourly chart. So that would be a targeted area. And Dan's telling me oil news with Iran. Okay. Yep, exactly, George. It's running into a void while creating a void, which is a momentum move into what we call the void. There's nothing to stop it until it reaches this area, unless for some reason, news related. I don't know, Jake. Shoot, I'll look it up and see why. I don't know. Let me finish this, and then when Dan's talking, I'll look and see why. Anyway, so similar pattern. We had this back and forth for multiple days there. The bear sandwich, as Dan calls it. The red body in between two green ones, and it cleared the highs here. Same story. There's the same correction bar. It should go up there, unless for some reason all of a sudden some other news comes out, right, and collapses it in the other direction. Same pattern going on here, give or take. Bottoming, consolidation at resistance. Now this has got some stall points, if you will, these pivots that the other ones didn't. We'll see. And it's not popping as much, but this has been lagging a bit. Nonetheless, it looks like it should move up here now. Just keep in mind, this is a downtrend, and the weekly has broken down. So while this looks great for the moment, we went into this week with a view. Let me just go to the spiders here. We went into this week thinking, okay, there was this move up that started, and it closed near the high. And, let it keep going. It would come up into this area here, and we'd get this kind of a 2-bar reversal up over here, and then the pullback. Well, it doesn't always happen the way historically it does. And so now we got a bit of a consolidation, which builds this little support point, which potentially, could make it go through here. This could just be a stall. Maybe it gets a bit higher since it had all of this consolidation going on. We don't know. And so we'll see where today ends. We go back to the futures, whether this stops right here. If this doesn't get up here, so I'm just throwing out scenarios, right? Just to keep in mind right now, the way things look, it should go up there, right? There's no reason to think it shouldn't because, well, it's beginning to stall here. But if it can't get up there, and it should go up there today because it's had this resting period. That's the logic of the pattern. And it had this bullish price action here. So if it can't go up there, and if by the end of the day, this is a topping tail bar, that's going to be a bit of a bearish sign. It's not going to be terrible, right? Because it hasn't broken a prior day's low, but it becomes questionable as to why prices can't continue to move higher. Now, that same thought processes can be applied to anything that forms a pattern like this. So this is a little bit of a whippy kind of a pattern, but it had this bullish price action, which is perfect, is what it should do at resistance after the run up. But if you buy a breakout and all of a sudden things stall and forms a topping tail, something's up with that, because after a resting period, there shouldn't be an immediate stall on the time frame that you're looking at. It's just common sense. All right. Russell, that's into resistance already. So no, wonder why it's immediately beginning to lag there. And we'll see how it deals with that supply area. Transports, whippy. I imagine it's got to go up as well. If everything else is, why shouldn't it? But of course, we'll see if it actually does. It's in a downtrend as well. Everything is. Spiders, we already looked at. Diamonds, 350. It could be a stall point there. The 20 MA is there, and it's got room. It's got room to get up into that red zone. We'll see what happens. FT failure like a breakout failure. Yeah, exactly. I don't know what the FT means, but yes. Well, a breakout doesn't fail until it actually fails, right? So just getting a topping tail bar, if that was to happen, right? If this was to turn into a topping tail bar, we question why, right? Meaning we're being objective, even though, say, we're in the position, we're being objective with that because we know that isn't the bar that should form. So now from a bullish point of view, what should be the next bar that forms? Well, it should be what we call a NFT, or a no follow through type of a bar, or that bar being ignored. So applying bar by bar analysis into the future is just a way of saying, look, that isn't the bar that should have happened with this pattern, but because this immediate movement here, price action, is bullish, well, the next bar shouldn't follow through much at all, or none at all. And if it does, we know, hey, the trend is down. Okay, there was a greater probability of that happening within a downtrend versus this same pattern. If we could drag this and put it up here, right, where it pulled back within an uptrend and it had a void above, that would have a greater probability of continuing higher. So everything that we apply, what we call our method, or MTS, is based on common sense. And that common sense is based on multiple concepts as to, hey, is it going up, down, or sideways? What's to the left? What kind of price action happened, immediately, like this bullish price action? Is there a void? Relative strength and weakness. So all of that just is what becomes second nature in our thought process. And Well, Bitcoin sideways at resistance. Interesting that it's not doing much here, because it's kind of been leading the markets, and kind of look at that as like, what's up with that? 4405. Meaning this either needs to play catch up, or this is a heads up that something's wrong. We'll see. We'll see. That's my thought. Crude oil, backing off. Why not? But it's interesting that it's backing off. And I say why not is because look, it had this big move in a couple of days. So it's a little extended there. I'm surprised it didn't get to 120 before it backed off. But that news that Dan mentioned, I don't know what it said, Iran news. Maybe that's the reason oil backed off and why the markets, of course, rallied. So what does that mean? I'm giving you my own thought. What does that mean? Well, inflation, oil backs off. Does that really back off inflation? No, but markets react to things on a moment-to-moment basis a lot of times, right? And so markets like this coming down a bit, markets rally. What does that mean in the big picture? Not a heck of a lot, because that's still going up and equity markets are still going down. Yeah. What are interest rates doing? Kind of like a yawn, nothing. Right? But that was a big bounce off of that deep retracement. 5-year doing nothing there. So no reaction there with interest rates. And what is gold doing? Kind of nothing. So leads me to thinking, well, that price action in the broader markets is still bullish and suggests it should go higher, but we've got, let's just call them some flies in the ointment as to whether this is just a knee-jerk reaction versus, well, it's real buying because it's going up, right? But it's the kind of thing that could evaporate pretty quickly because things aren't moving in lockstep as they should. Silver doing nothing there. It's at the top of the trading range. So, and what else? I was curious. Euro. The dollar's been going up, right? And that, well, it's getting there. Getting parity with the dollar. It's been, well, we got this low down here. That would be something if the euro, if that actually did get there. I don't know when, how long it's been. Just going to the monthly chart. That's a continuous contract. Well, actually, since it bottomed out, it went up, started going up there in 2000. It's never reached 1, and maybe it won't. Just a thought. That would be something if the euro, something would be going on if that broke down below that area. All right. What else to look at here today? Indices. We looked at interest rates. VIX. It's just a mess like everything else. That been dropping down as it should. All right. So, Jeremy, you asked me about this yesterday, whether I used VXX or this. And so this is what I use, and you can see it's even updating in intraday. So it works fine during the trading day, and it's the levels that I've always used for decades. I think that is it. TBT. Well, that ripped back up there yesterday. The markets are pretty volatile and on a moment-to-moment basis. And as always, we'll just see where today ends. That is stalled there. I'm just waiting now for the markets to open. I had a little bit of a run up, and so we'll see. It's kind of quick for me, Dan, but that's about all. Do you buy breakouts when the consolidation range is not tight or small? No. Well, look, this you call this a breakout, but it's not tight or small. But that doesn't mean I can't buy that by looking at what's happening intraday, because this is bullish price action going sideways at resistance. So while I wouldn't buy this in this time frame because of this whippy up and down price action, it's not a tight base, I could enter it here, right, and manage it from here and see where that ends up. Now, someone who is just trading from a daily time frame that doesn't look at things intraday wouldn't be able to do that. And in reality, somebody doing a swing trade wouldn't be doing this as a long anyway, because the trend is down in multiple time frames. So they're waiting for this to reach some destination or a failure pattern to short. Now, it's not going to be a good short either. So let's assume this becomes a topping tail where it closes here and the next day is a red day. We've got all of this consolidation now, but it's a whippy consolidation, this up and down. It just makes for a hectic, erratic pattern that is not so predictable. In any event, what to do here. This is how you would interpret this as an intraday trader using this daily time frame. Now, should this actually reverse, as we're just having a conversation as to, if this was a topping tail or if it just turned into a green bar ignored. Well, while we've got this all whip here, right, all of this over here is meaningless, right, which is these, over that bar and that bar. What we're going to trade is this. So all of that over here, who cares about it? So anyway, if this for any reason would just fail and come under that level, that type of a shock would likely go through this. But anyway, we'll see how it plays out. Multiple time frames is an art, in of itself to understand. And of course, that's part of what we teach. But anyway, it can become from all of us. And when we begin looking at multiple time frames and understanding how to interpret it all, can be a challenge. But it's one that definitely through education can be understood. Okay, all yours, Dan.
Good morning. Yeah, I hate when these gaps mess up our easy game plan. I was texting Greg as the markets had this bullish 15-minute right here. It's 180 reversal. Right then, I was thinking to myself, this is a no-brainer 30-minute high day. No-brainer. Breakdown failure on the 15, bullish price action at resistance, buy a 30-minute high. But it left the station without us. So nothing I can do about it. So we need to watch the pullback. Yeah, Greg, I think I heard the news on oil was, obviously everyone's focused on oil being at 11-year highs and, whole deal. And so apparently Iran is going to let more oil out or whatever. So that's when oil started tanking and the markets like that also. So I heard that.
All of a sudden, the U.S. is buddies with Iran.
Exactly right. I know. That was exactly right. That was my reaction. All right, so all our opens are okay, except Amazon Beast. We got to keep an eye on. We have a call spread for tomorrow over the 50 MA, which is still far away. But that was my concern. That this is, we talked about it. It's still a bullish consolidation. But we have a huge bullish watch list. And let's go right to it. I remember Greg mentioning Citigroup week yesterday, and I didn't notice how it closed. That's a bullish engulfing bar with a price void. So let's keep an eye on that. Over yesterday's high would be fine for a directional and also a put spread.
Show them KBE, Dan, just as far as financials. And yesterday, that crazy price action up and down, down and up. But
What did,
that's a look, keeping an eye on financials, and sometimes they get out of sync with the markets, but right now they're a big focus. And so while the markets were a little shaky yesterday and this was going up, it's like, that's just one of those flies in the ointment type of situations. Like, how bearish can you get on the broader markets when financials are, leading higher?
yeah, that's exactly right. So that's why that's a key kind of internal, if you will. And I told you our buddy Kelly, Kelly thinks it's even more correlated, with the NASDAQ banking KBWB, but whatever, they both work. All right, so with oil down, let's see if, if there's any, this is not, there's no potent reversal here, but definitely we can look for 1 DTE put spreads. Snow yesterday on earnings got killed, 217. But when things are just such a big old excessive gap on earnings, I like a 30-minute high. I'll sell a put spread for 1 DTE. That's my bias on that. Can 655. There's so many, bullish bottoming patterns here. So we got to see how that sets up. Greg IoT 1881. Yep, there's so many today. I had to toss my next one right there, Greg IoT on my list. WDC, it's not, I don't think it's earnings. I forget the news on this. But this is a nice, remember yesterday, MT Live? This is not what we call a double bottom, but it's a bullish turn on support. The weekly is actually a potential double bottom. The weekly is, see that? So it hasn't made the turn yet, but that's definitely worth watching. On WDC, I'm going to put that in the window. Excuse me. SQFY. Yeah, that's on the list. Earnings is up here somewhere. And then these Vive getting whacked. So that's another one. The gap is so big. Let's keep an eye on that for a put spread, 30-minute high like snow. These were left over from yesterday. CBS, I like directional and put spread over the high. Penn, same directional and put spread over yesterday's high. Amgen, over yesterday's high. Those are all good swings. Splunk still range bound. This is a perfect pattern for an iron condor. 128s, 111, whatever. This is a sloppy potential double W bottom. I just don't like the way it was stair stepping down, but it's working on the right on the retest. Oh, it's light volume. Forget about it. And pins setting up for what, Thomas? One of those continuation patterns is what I'm thinking. You're thinking. Octa 174, big gap down. I have no idea which way that's going. This I like, gap reversal going sideways with a nice bottoming tail close. That's a definite put spread idea in 30-minute high. AI 20, it's gap in resistance. It's moving too much for me. Box 2780, bullish gap, but excessive. Plan. All right, this one I like. I have it right here in the middle window. It's gapping to $52. And look, I mean, you all know, you see it, I got my weekly and monthly here, and that tells me how big the void is. And this is not a core trade, the way it came down. But gapping up to 52 bucks right here, it's a gap breakout on the daily weekly. You know, it's a big percentage gap, 40, it's gapping up $6. That's a big gap, but it's a nice pro gap. Kids, I've never heard of this stock. I don't see where it's gapping, but it had earnings. Really gapping up to 12 bucks. So here's another gap breakout, but the volume's not big. We'll come back. Fly W, same. We'll come back. Volume's not there. BBSI, no volume. You're gone. GEF. I can't tell where you're gapping. APEI, light volume. Visco. It's, you know, it's made the turn on major support, but I like my other ones better. RSI, nasty gap down to all-time lows. Now, see, this was a double bottom, an M bottom. This is right out of yesterday's MT Live. Down, up, down, retest, and turned. But earnings killed it. So now that's a failed W bottom. But that was earnings. Amgen alarm just went off. So that's Planet Fitness. Oh, this one had a secondary offering. I really can't see where it's gapping. But if it can take out yesterday's high and ignore the bad news of a secondary offering, this is a 180 reversal on major support and the 200. That looks fantastic. So let me set an alarm. Eyeball it right here, 85.50. Let's see, that's a no-brainer put spread. A 180 reversal on major support in the 200. You know, it came down pretty sloppy, so I'm not crazy about it for directional. But that's what we do for put spread. We're calling a short-term bottom and see how much money we can get. All right, Thomas, that other one you showed me of the pins a few minutes ago, this has the same flavor of that, but this is a superior setup. We'll come back and talk about it later. I don't have time now. It's 9:29, but this one is much better than pins. So I'm going to put that in a window. But yeah, we'll talk about it later. But I mean, study them yourself. Oh, actually, Michael and YouTube just asked me about that. I just got to it, Michael, on my own. Yes, I like it a lot. So put it in a 5-minute window and we see how it sets up. Delta 20, asking about Lilly. Lilly broke out. Yesterday was your entry. Mo, yep, see if you can get a 1, 2, 3. Then I would like it. And he asked about Pfizer. Well, no, so he didn't ask about Pfizer. I'm telling him about Pfizer. Pfizer's trying to make, it's still in a downtrend without a doubt, but it's making the turn at the 200. And oh yeah, you did ask about Pfizer. All right, I'm having a lot of alarms go off here. Power, ALXO. All right, ALXO, we're already in trail mode, but it looks fantastic. All right, snow bottom right. Power, 111, 108.86. Greg, any help on Amazon? Stuff is, you know what it is.
Said it's right at the top of the range. If it fails at the gap fill for buyers to show up, well, that would be a good sign. And queues are gapped up and getting sold, and intelligent